daily profit play. We had a defense trade. Net result, we made some money. Okay, that was around 2 o'clock in the afternoon, Eastern time. At the close, I saw a tasty settlement at it would have been cash settled 68.3775. Our break even was 68.50. So we were down about 75 cents if you let the daily profit play go all day, right? But we had a defense trade that got filled for $1 that had a $10 profit trap that actually offered a bonus profit, and you would have closed out for $825 on that. So if you had 825 minus the 75 cents, you'd be up 750 bucks yesterday on just one contract. Not bad. Now, I'm happy winning the day, right? I'm happy winning the day. We had lows yesterday around 20 or 19. That would have been flirting close with our with another small loss on top of daily profit, but it didn't. We measured out price to sit right around 68.40, and these are our levels yesterday. I mean, technically, I would say, like, you know what? You kind of got to give the markets credit for sticking right to it, because that was our calculation, right? So I would even say, as ugly as it was, it still turned out to be somewhat an efficient day based on the plus or minus 52 that we had. We had a plus minus 52.37. You go from the open lower, which was a gap. So you take the gap lower, go your 52 points right there. That blue line is pretty much where price was at. So today, pre-market's up a little bit futures wise. I'm going to go into this chart over here. Getting a bit of a futures arrow this morning that's green. Okay, it's good to see. See if that actually sticks around for the day. Okay, we also took a win yesterday, 100% ROI on engineered options. We needed XSP to stay above 682, and it closed yesterday 683.78. Nice little surge at the end of the day. Plenty above our strike. Grabbed a 100% winner yesterday on engineered options. So congrats, win the day. Got a new trade filled in waterfall income. 100% winner on engineered options. Newsbreakers, I want to take a look at some trades this morning. We have a little bit of earnings to take a look at. Home Depot is this morning, workday. I'll take a look at this one today. So workday, maybe some of these. I'll just look at some flows. I'm gonna look at some flows, look at some expected moves. Let's see what's coming in on some of these, shall we? Oh, we've got State of the Union tonight as well. Let's see what type of message that brings us later tonight. Okay. Royce didn't fill yesterday for 50 cents. Should have filled. Did anybody else get filled yesterday? I posted in Telegram when I got filled. It was posted around our session. We did a session like 11:30 to 12. Let me see when I posted it. It was in the public Telegram here. So let's see that I posted there because we are still winning trades despite all this craziness. There it is. So at 1:24 p.m., that trade got filled. Trade number 146 on our tracker. Good video to check out. It's about like a 5.5 minute video that I did with Emily Turner on Unfiltered Finance. So just talking about how much earnings matter with NVIDIA this week. I think the market's going to take its cue, whether it has permission to go higher or kind of the short-term nail in the coffin to drive things lower. Saw there's a big deal between AMD and Meta that happened this week, like yesterday, and AMD's up like 10% because of it. So there's still some movers and shakers, and this is the good stuff with the overall AI narrative still remaining positive, which I think it absolutely has to, and kind of keep things afloat. All right, so let me go. All right, we'll take a look at some Individual stocks today. Maybe trying to find some short-term plays for newsbreakers. Larry says I didn't get filled on waterfall income either. Okay. I mean, I'm not too worried about it. Obviously, if price slides a little bit lower, that 50 cents is no problem getting filled. Slides a little bit lower, we have another trade sitting for a dollar as well. So if they didn't get filled, that's okay. It's weird. A lot of you have Tasty Trade as well, Thinkorswim. So I would be I'd be surprised if we push a little bit lower if we don't get filled. I'll say that. Okay, so let's go into 24th SPX. I'm seeing a plus minus 46.45. 46.45 futures up a little bit, and VIX is still in the 20s. Probably more of the same. Let's keep an eye on these previous highs. Just something to be mindful of in case, here's what happens, right? If the VIX taps these alerts to the upside, most likely the S&P is coming down. Yesterday, the heat map was brutal, by the way. This is the heat map yesterday. Yikes. 70+% of stocks, red. Advanced decline, you have 69% declining with some big names. Some highlights, consumer staples. So Walmart's up, Procter & Gamble up, Coca-Cola, Pepsi, Philip Morris, Altria. Great. Healthcare, Eli Lilly, big green, Johnson & Johnson, green. Abbott Labs, Merck, AbbVie, Amgen, Pfizer. Hey, Pfizer getting $27. Can we hit 30? Can we hit 30? UNH down. Utilities up. So consumer defensives, utilities, healthcare. Nvidia has earnings, so we'll see what happens there. Why the major sell-off? I don't know. I wasn't real stoked to see financials doing really poorly yesterday. JP Morgan down over 4%, Visa down 4.5%, MasterCard 5.77%, Amex down 7%. Oof. Let's have a look and see what the headlines show. JP Morgan. So also gapping lower by another 60 cents this morning. Let's just take a highlight look through some of these major financial tickers. Anything that stands out. Business banking division. Top brass is grilled on AI and competition. Okay. Let's go Amex. That's a pretty big drop in one day. Again, this is kind of you're labeling your top end consumer here with Amex. So American Express down about 17%. I mean, the top end consumer has been carrying the consumer spending for the last year. I'm sure everyone saw that statistic last year. We talked about it where I think the top 20% of earners are doing about 60, 70% of the spending in the economy. So if that demographic pulls back a little bit, we could feel it. Anyway, do I say buy Amex now? No. You can see here, like pullback wise, I mean, it's not immune. Here's a COVID crash. Here's our 2022 bear market. Pulled back about 43%. COVID crash pulled back around 50%. Yikes. Even 2022's bear market pulled back around 33%. So, could it be a buy opportunity? Sure. But I'd like to see a pullback maybe into this area. There's 35% on Amex. I'd love to see that pullback. Right? A lot of these charts just look at a chart pattern. Where's a good spot to buy it? Structure support, 275 to 250. Not a bad spot, right? If we came back into this area, if we're going to maintain a higher low, that's an area one to look for a bounce, or down here, if we test this level, look for a bounce. Would I be long-term on this? Depends on if you want to hold it. But this area, if we bounce, could this be setting up another type of topping pattern? Maybe, right? Nobody knows the future. But between there or there, I would say those are logically pretty good bounces for at least a short-term play. When I say short-term, I'd say even a 30 to 60-day swing trade. Okay? So keep an eye on that. Here's Visa. Again, decent structure around the 290 to 285 zone. Pretty well supported as some big moving averages. 2024. I mean, I also consider this like past high here. That's a 250 past high where we started the rollover in 2022 with that bear market. So either bouncing off moving averages or finding past resistance to become support. And that's a pretty good spot right in here. Right? Resistance became support. So we either bounce there or bounce there for the near term. Okay, good stuff. Daily Profit Play link Telegram. Bruce, if you're in Daily Profit, you talking Daily Profit Play members? Because that'd be a membership thing, right? Daily Profit Play members. ProsperityPub.com/100 is your Daily Profit Play membership. Classroom, alerts, all that stuff, Daily Profit Play. 45 on Thinkorswim. I've got 46.45 on Tasty. We're going to go with the higher one today. Nice. Gloria says Broken Wing Butterfly yesterday was a big win for me. 770. That was excellent. First profit trap. Good profit trap. Good stuff. Excellent. Yeah, I was going to say, was yesterday inefficient day? I'm going to say no, even though it's right on the cusp. Not an inefficient day, because where did the market close? Right within the expected move. I'm pretty sure market makers can justify having prices within 1 point of their expected move. I mean, if we were down here at the lows at 22, I'd say inefficient day, right? But we came right to the line that we expected. And I would say, even though it was an annoying day that we pushed lower than our expected move, price did cooperate. And we were there. I mean, the truth is, like, having a 68.40 by 30, it's like, okay, so I would have lost on that trade briefly, barely. Like I said, net loss would have been about 75 cents. But that defense trade, that's also why I want to put the defense trade in for $1,000 and not $500. Had we done, this is just, we could have done something similar, but if I did like a 35, if I did a 35 by, I'm trying to think what I could have done to overlap yesterday. I mean, it might have been close getting filled. We did a 68.30 by 40, so we could have done like a 35. I'm curious, like the 35.25.10. I don't know if that filled yesterday. Did anybody have that trade in, by the way? It would have been a second defense trade. I think I went lower on the defense. So we had one defense that was 45, 35, 20. And I'm curious if in between our strikes we did a 35, 25, 10, if that would have actually filled for $1 yesterday. It would have been close. And it wouldn't have been a profit trap. That just would have been another winner. If it was 35, 25, then it would still been a full $1 winner if you get filled on that. But anyway, good stuff. Today, like I said, market is opening up a little bit flatter. Futures went up for 0.18%. Now it's 0.06. Let's see some gamma this morning. So pretty strong support around that 6,800. Pretty strong support again. Let's say this level, big gamma here. Would I love seeing price break lower? No. You can see a gamma way down here at 67.50, but hopefully we will stay. I mean, if we have a plus minus 68.37, guess what? Plus minus 46 points. We're just getting below 6,800. So to me, I'd say we want to be kind of positioning safely below this. This is around 75, 67, 75 on the put side. And that should contain that expected move and hopefully not drip too much lower. Hopefully we have decent support off 6,800. So, we could still eat into this inefficiency a little bit yesterday, just like we did here. 6,800 big gamma. On the call side, we're way up here on the call side. So, I mean, even within, delta wise, it's like going to 75 or 80 is probably going to be where we have to position. Yeah, I'm just curious what I kind of craft today. It's Tuesday. It's the day before NVIDIA earnings. Hopefully the market doesn't decide to move big directionally, because tomorrow is going to be much more of a impact. NVIDIA as a catalyst will be a much bigger impact in the market. I just don't know if it's going to be all. Do you think the market would have a repeat of November 20th? in some way, shape, or form, whether it's the opposite, like, oh, we're down on NVIDIA, but it gaps up and rips up. I mean, that's very possible. Or obviously, NVIDIA saves the day with strong earnings and the market loves it, or market doesn't care, watch price. Okay. So we'll see. Opening bell in about 15 minutes. So we're at a 21.24 VIX. Let me adjust my daily profit indicator, 6837. 6837. Okay. We are pretty flat on ES. So I'll move up 46.45. So we're going to have this tiny little gap up right about there. And let's go up around 47 points. Okay. And then start from the close. Go down about 47 points. And there's some support. All right. So that's our expected move based on market makers. Pre-market expected move. Again, taking a little bit of a gap higher. That's what I'm showing in futures, but it's going to be tiny. 68.90 to 67.90. Like I said, I would prefer to be looking at a put spread around the 67.75. And to be safe, I'd prefer to have, the call spread above 69.15, 69.20. Just to be pretty safe. Okay. How do you get 47 points? It's right inside the broker platform. So if you have Thinkorswim or you have Tasty Trade, you can look at your SPX. So SPX, go into your option chain, Feb 24. So here's today, 0 DTE, plus minus 46.45. So I'm just going to round that up to 47. If price stays within that today, efficiency. It's what happens most of the time, right? So do I always want to sell at those levels? Not exactly. I mean, I want to give myself maybe 10, 15 points, 10, 15, 20 points higher than this, lower than this to increase my probability profit. Okay. Andy says, if I start taking these trades in my Roth account, can I let them expire? I only have 18K. You can. If you want to let them expire, though, I would just go lower delta so you have a higher probability profit. That's all. I mean, I would only do like, maybe a 6 to 10 delta to increase your chance of profit. And like we said in the master classes, if we're going like 5 deltas or 10 deltas, I think that the rule of thumb is if you're going to go $5 wide, make sure you get $1 credit. If you're going to go $10 wide, we've been getting filled at a lot of $10 wide for like $1.50. I'd love to say get filled for $2, so that way the risk reward is about the same as if you went 5 wide. But just know the risk. But a 5 delta or 10 delta should be far enough out of the money that I don't mind. And I have been holding a lot of trades. I've held a lot more daily profit plays to expiration or very close to it. Right. By the way, you have a cash account. If you can trade spreads in a cash account, there's no pattern day trading. Right. You have 18K in a Roth. That's a cash account. If you have cash, you can do whatever you want. There's no pattern day trading in IRAs. Yeah. So you can open and close however you want, because as long as you have enough cash in the account to close that trade or take other ones, you'll be fine. Cool. All right. Good stuff. Good stuff. Stating a speech tonight. Yep. So we'll see. That could rile up some futures overnight a little bit. We'll see. Because of that, I mean, today could be a very efficient day just because of that. Like, so much is pressing, like tonight for the State of the Union, tomorrow for NVIDIA. So we can hopefully capitalize on that today if we have a bit of a dull day. So should be good. So we'll see. Markets open up here in 10 minutes. So I'll get some positioning. I might look at a daily profit play around these levels, a broken wing at these levels for defense. And if the market stays in the middle, we pull another winner for daily profit play. That'd be pretty nice, right? Um, again, to be on the safe side, I might go a little bit wider today. I might go 10, 15 wide, but go 10 to 15 wide up here and go 10 to 15 wide down here. If I can go a little bit wider on a 15 wide, I'd like to pull $2 if possible. But I'm going also further out of the money, where I mean, I'm essentially going, 80 to 90 points higher. That's going to be tough to get filled unless I let it pinned. So anyway, I'll figure it out. We'll have a game plan as always. Heat map will reset. See what advanced decline looks like today. Earnings. I want to take a look at some of these stocks. We have workday today after market. I'll see if there's any big flows on these for after close today and opens tomorrow, and then we can start this again for Wednesday close. So I'll take a look at these columns here for notable earnings, see what sticks out, see if there's any decent flows, and then take a look inside the option chain. The ones I have in yellow here are just companies that I've been following. I either have exposure on or I'm looking to see what they do. Like Baidu is typically somewhat volatile. Dell, I mean, you kind of put Dell into like the old school tech space, like Intel, Dell. They've had some great runs, but IBM had one of its worst sell off since like the 90s yesterday. IBM had a terrible day yesterday. I mean, like I said, the financial stuff down, cards down. Here's IBM. Yikes. What was looking pretty darn good. Wow. I mean, just how quickly things fall, right? As they say, bulls climb stairs and bears jump out of windows, and that's what it looks like. So, would I step in and jump into IBM? Not necessarily. I mean, why is it that IBM is falling so badly ahead of earnings? I have no idea. Let's see what it says. Worst drop since 2000, 22 billion in market value. Anthropic's tool for COBOL systems, COBOL, contributing to 25% decline this year. AI tool threatens IBM consulting and services revenue. I mean, is it not possible for these companies to be incorporating AI? So anyway, I just saw that like OpenAI and Anthropic's burn rate was like doubling down in like 200 and some $billion in cash. It's like, I still think that somebody like a hyperscaler, like an Apple, is going to buy OpenAI for pennies on the dollar when this all settles in. It's just so disruptive right now. It's like, I do not want to be outside of an individual stock, right? Outside of maybe getting lucky and buying something. Gosh, I look at this and I'm like, did we have a pinch point on IBM? Because that would have been a sweet freaking play right there. Or, I mean, they're probably done now, but IBM, I mean, IBM's mixed. I see, bullish and bearish flows. But anyway, I mean, obviously the Bears went out. So it's not nothing, but this is the disruption. This is the dispersion we've been talking about. This stock was a great performer, and it's down 20 or 30%. 30% in, I don't know, a month. That's the dispersion. You've got stocks that are up 30%, down 30%. Stocks that are up 20%, down 20%. So it's like you somehow ride what's winning. I mean, we're up $5 pre-market, which is a little bit of a bounce, but still, I would not be guessing where these things are going to bottom. Don't catch the falling knife, Let's see here. Centrini research report came out in AI. Yeah. So it's just a lot of news and it's a lot of disruption. I do think a lot of it is a bit of an overreaction. But I am not here to be this brave soul that's like, this is overblown. There's no way. Look, stocks are freaking overvalued. So the carnage that can ensue is not something I want to step in front of with my risk capital. If things are down, I'm not touching it. If you're benefiting from the puts, great. If you're not, don't guess. Don't catch the falling knife. If I'm going to sell, if I'm going to do something on IBM, I'm putting stuff way down here. I will give this market all this space to say, okay, I'll take a stab at it. It's down 50%. Maybe I'll take a stab at it. Right? But I'm not interested in the first little pullback to moving averages. Could it be a short-term bounce? Yeah, maybe. But you want to get a good sense of the market recovery, and I'd say here's your chart. Bitcoin versus IGV. Okay, this is Bitcoin versus software. Okay, so right now, if this catches a bid this way or breaks a trend line, Bitcoin might come out of its little doldrums that we've seen for a 50% correction, right? If IGV gets a bounce, this could go stronger to the downside. So we have to see, is it software getting a recovery or Bitcoin catching a bid, or obviously look at each individual one. If IGV catches a bid, look, IGV. There's your software. Is it catching a bid right now? Heck no, not even close. Is Bitcoin catching a bid right now? Not even close. Nobody knows where these things are done. I think these are the type of trades where you could be rewarded for confirmation. Okay, that's actually one of my favorite things I taught over the years. I called it confirmation versus anticipation. Right? Everyone wants to know where's the bottom? Where's the bottom? Where's the bottom? Where's the bottom? I don't know. Confirmation is we hold these lows, we get back up to this level. Now we can say, okay, trend line break confirmation, I can buy. Dips and pullbacks, I can buy. The bottom are retested, I could buy. That gives you much better permission to trade. Okay? Because price has responded to something structurally. But when we are just lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, there's no reason to guess when you can just wait for this trend line to break. Do I want it to break and go up? Of course. I've got some Bitcoin. I've got some exposure. But there could still be some cleansing in the crypto world. Not Bitcoin necessarily, but Bitcoin's already down 50%. So there could be some cleansing going on here. Technically speaking, we're pretty much at a critical spot here, right? Past resistance becoming support. You'd hope to see that hold. Lows and lows and lows. Could it hold? We'll find out. So if it holds here, that's an encouraging sign. But to be a buyer, I want to see price cooperate. We got to get back to 90 to 100K. Then I can say confirmation buy, pullback fib buy, and then retest the lows buy. I can scale into that for, 1%. If I'm right, goes up. My overall holdings goes up, but long ways away from that happening. IGV, same type of thing. I'm not guessing that the low is in. Has it been overdone? Sure. But no stopping this thing right now. Falling knife, we're taking out lows. We're sweeping this, August 24, April 2025. I look bear market, look at left bear market, tape 2022. Could this slide down to $50? Sure. You're going to look at software stocks and say, oh my gosh, what a great value. Maybe. Or is the software stocks that are going to be irrelevant in 3 years? That's the type of disruption we're talking about here, folks. It could be ridiculous. So I'm trying to avoid the risk, It's hard to think that there could be that much disruption to ruin some great companies, but it can happen. And also, you should know this. In the long run, is it better to be a stock holder or an index holder? In the long run. The top stocks rotate. The top stocks don't win in the long run. The fact that we've had Mag 7, top 10, Mag 7, Fang Man, whatever it's been called the last decade, they've all rotated. But those stocks have been around. I mean, Microsoft was around in the 80s, 90s, right? They emerged victorious after the great financial crisis. Microsoft didn't do crap through the dot-com bubble. So it's been amazing to have a basket of stocks perform this well. But overall, the answer is the index, because whatever leads makes its way into the index. And a lot of the stuff that's leading right now, the market caps are small enough. There's rotation and gains. So anyway, opening bell, let's go. SPX, here we go. Plus or minus 44. Take an eye on, do we gap up a little bit? Tiny bit? Nope, we're slightly down. We get some real-time gamma up. Okay, so we've got, I'd like to be selling calls above 69, 69.15, 69.20, which again is going to be a pretty high delta or pretty low delta. 5 delta, 15 by 20. Let's go. All right, I think I'm going to go 15 wide. I'll go 20 by 35. Gosh, that credit is garbage, by the way. That's 15 wide. And then the 67.70, that's a higher delta. Let me go 10 here. 50 by 35. So 15 wide, $1.55. Not a bad one to manage. So coming into 68, we could probably do better on this one. Let's tighten this up. If I go 10 delta, 6,900, 10 delta, ugh. 68.50, 68. I mean, that does seem a little difficult to get to. I'll try 10 by 25. Okay, two. So I can go 15 wide, $2. Kind of keep an eye on things this morning. I'm going to go for it. Give me 205. Just give me over $2. Or give me $2. All right, I'm gonna leave this one at $2. It's a 69.10 by 69.25 or a 67.50 35. So I'm going 15 wide. Pretty low delta. I mean, this is a 10 delta put and a 6 delta call. I'm just basing this on some of my gamma levels as well, right? So trying to get up here above this like thicker gamma on the upside and well below this gamma here below 6,800. Plus, we know that we have support around the 75 handle, so 67.75. So I'm trying to go 50 by 35. Come on. I'm going to leave this pending at $2. Let's see, 69.05 and 15. All right, this one's not bad. Let's see if we can get $1.60 out of this one. All right, I'm in for $1.60. I'll put that right away. That one should get filled. This is 10 wide, by the way. So new trade, SPX, coming into members. Today's the 24th. 69.05, 69.15. $1.60 credit. All right. So I'm 10 wide, posted. XSP has it's not poor. It's just it's lower. I mean, if you want to go liquidity, SPY has the best liquidity. SPX would probably be second. ES you throw in there, kind of sprinkle in with SPX, ES. That's futures. XSP I would kind of rank as an S&P instrument. It's probably the bottom liquidity. It's still liquid. It's getting better. But it's just I don't know why XSP isn't better. I don't think people have. I mean, honestly, if you take the SPY traders, I wish that SPY traders would trade more XSP because it's a micro index, right? But a lot of people just trade the SPY. A lot of people trade futures. It's still solid. I mean, it's the nice thing is it's still going to move tick for tick with the S&P. So you have a great correlation. It's just the liquidity is a little different. All right, getting filled $2 and 160. All right, well shit, we got some trades on the day. So $2 fill. I need to play some defense because I got 2 trades in. So here we go. Trade just got posted. Again, you don't have to take both of these. These are optional, but I'm going to get in both. I'm going to try to manage net profit on the day. 224 expiration. I went 15 wide, so that one is a 10 by 15. 69.25. 67.55. 67.40. 50 by 35. For $2. So 10, 25, 50, and 35, $2 credit filled. All right, so I'm in 2 trades. One of them's 15 wide, one of them's 10 wide. They're in Telegram, 9:34, 9:36 a.m. Trades filled. So 05 and 15, 55 and 45, 55 and 45. That's a DP daily profit play 10 wide, and here's a daily profit play 15 wide. There we go. So I will keep an eye on these for the morning. Let's see if we have some gamma that will hold. I mean, we are way down here. I mean, I'm starting my strikes at the 50. What's my top strike? 55 and 50. So that would be my line in the sand. So green is the expected move. I'm sorry, blue is the expected move. I'm going to go green for my strikes. So 55. And I'm up here above the 6,900 handle. 69.05 and 10. So 69.05. There. So the way this day will wrap up is as long as price stays below the green line, above the green line, all this is for a win. That's my daily profit play. Based on what the market makers showed us this morning, we should see price stay within this blue line and this blue line. So I'm outside of that to hopefully increase my probability of profit a little bit. Trades are in Telegram. They are in Telegram. It is in my daily profit play. You have to be a member to get the alerts and you actually get the trades. You're here for a free session. You have to be a member to get the actual trade alerts inside of daily profit play. Oh, shit. You're right. Sorry. I don't mean to yell. Yeah, they're in the, hey, public Telegram gets them today. Sorry. That's what happens when you have 10 channels running. There's one. There's one. I stand corrected. All right, 2 trades. You can get them filled. All right, well, public Telegram, you had a chance. Now they're gone. Now it's in members. Yeah, we'll get some defense trades going. Everybody see them now? Sorry about that. Okay, so $1.60 and $2 filled. Let's double check. 15 wide is, I mean, they're looking pretty good. Look, if you can get the 10 wide for $1.50 or better, I would keep the 15 wide at $2 and just let it do its thing. Okay, just because the 15 wide is taking on a bit more risk, we technically would want more like $2.50 to $3 on a 15 wide. Okay, PO got $1.75. Okay, yeah, if you're as long as you're getting $1.50 on the 10 wide, I'm pretty happy with that. The 15 wide, I'd keep it at $2 and see if it fills. Okay, so I will keep a quick eye on these for the morning. If the combination of the two is up, I mean, right now it's like I've got a max profit of $360. I'm likely not going to hold both of these for the rest of the day, but if I can get $150 to $200 profit, I will take it and move on. Okay. I do want to get some defense trades in. So defense is going to be a little crafty today because I have, so this is my call side and here's my put side. So defense, defense, this is my 10 wide and this is my 15 wide. So this is on the put side. If I put on defense, what could I do here? I could go 70 by 60 by 40. I'm risking a little bit more on that trade. Let's see if we can get. So that's right at the lows. I would do this one for defense. This gives us $1,000 profit trap. I would try to get, let's see, for 9, I'd try to get like maybe $3 to $4 out of this one. So then put a break even at, if I did a $3 credit, because I'm risking more than $4, right? Remember yesterday's defense trade, we were getting $1 to risk 4, but we had $1,000 profit trap. This one I would want at least, I'd say at least $2 to $3. So that puts my break even down to about 40. If I do $3 break even is going to be 47. That could be a pretty good defense trade there. Defense wise, I'm going to try this for 2 contracts. So I want to get $3 on this trade, and I'm going to go $3 fill, pending order. Okay, so I'll keep an eye on that one. Again, price is going to have to come in and kind of threaten this area for us to get filled at, $2, $3. But I'm going to put defense on that. And then up here, I started my defense going into this strike, so I could go 80, 68.90, 6900, and then the 69.20 to layer this in. And this trade, same type of thing. That would be similar risk. Let's get $3 credit. Okay, so my defense would be in here. I would have, did you change the color here? So 68.90 to 6900 is offering a $10 wide profit trap. Okay. And so that puts my break even at, without taking any credit, that puts my break even at 69.10. If I pull in $3 credit on top of that, my break even would be 69.13, which would be right inside this defense area of my, my sell strikes on the 10 and 15 wide. The big gamma that we have is 6,900 today. So our defense would be above that. I think that's a pretty fair place to put it. Plus, we're talking single digit deltas, which again, probability wise should be pretty good. Okay. Call side wise, let me see if I can reduce this risk. That'd be risk of about $700 with $1,000 profit trap. Yeah, that puts, break even at 69.13. That's pretty good. I was going to say if I put it at like 14 or 15. Yeah, I'll keep it there at $3. I'll keep it there. All right. So I'm adding this defense for Daily Profit members. Make sure it's right Telegram channel. I don't yell at everybody like, I did it. I posted it. I did. I did post it. I just posted it for everybody. Anyway, now you have it. Okay. DPP defense. Adding top and bottom defense. SPX top. And again, these aren't guaranteed. Okay. These are just going to be pending orders. So I don't want this to cost me anything for defense. But it's a 2/24 expiration. That is the buy the 68.90, sell the 6,900, and buy the 69.20. That way the strikes don't overlap. So that's a good thing. I'm going to go $3 credit. Okay. By the way, if I do close out my other daily profit plays today and these don't get filled, I'm going to cancel my defense trades. I only need them to be there if I'm keeping on the daily profit plays. Make sense? So 2/24 expiration, buying the 67.70, 67.60, and 67.40 for $3 credit. Okay, just got posted in the members area. So those are pending. Right now, my 15 wide is up about $30. My 10 wide is break even. Chart alarm going off. SPX crossing 56. Oh, my Lanta. Look at this. Look at this ripper. Jeez, man. Again, like pretty darn inefficient if you ask me. Just let the market do its thing. Is there a reason? Falls, governor, blah, blah, blah. Like just another comeback trade. And did anybody see the alpha arrow, by the way? Alpha arrow this morning on futures, right around 68.50. It's up a couple points already. Look at this. I think we're in a great spot today. I really do. I think for at least managing profit this morning, this is the market maker move right around this blue line. So this is where market makers have already, expected price to be highs and lows today based on the open. And we're a little bit higher and we're a little bit lower. So we're trying to give ourselves a little bit of safety above and below and hopefully making some bucks. So Bruce, I think, let me check the page here. I know that Mike's going to come on in a little bit. He'll be reading through some daily profit play stuff. I think he's going to come on around like 10:30. Prosperity Pub, I think it's /100. Let me see. So we've got bonuses here, 2 years for 11.90. Yeah, I think this is the one that he'll be talking about. So you get 2 years with me for 11.97. That's under $600 a year for a trade we do every single day. And by the way, just in case, do I have anybody that's brand new to today's session? By the way, like brand new to me, brand new to Daily Profit Play, Daily Profit Plan. I run these sessions. I can talk about whatever I want. All these services. If I have anybody that's brand new, I also like to give out my free sessions here. This is a little foundational session on just one trade mastery. Learn how to trade the market up. Learn how to trade the market down. If you like that stuff, there's a full course that I give. So this full course is a la carte for $497, or you can get it as a lifetime member to any of my classes. So if you join any of my services, I will give you a $500 bonus course that has 13 of my favorite option strategies. Bruce, second day here. Yeah. Bruce, are you the one that emailed me? Are you the Bruce that emailed me? Just join my Discord. You want to do a private workshop? No, that's a different Bruce. Okay. I had a Bruce email me yesterday asking for some one-on-one stuff. That's a different Bruce. All right, all good. Well, appreciate you being here, Bruce. Defense trades are posted. 10 wide did PO. Okay, good. DPP, what's the game plan? Game plan is this. Look for some profits. So watching, and we'll see how the day unfolds, right? So what price needs to do right now is just kind of chill. We're still giving ourselves plenty of space. It's like, are we going to see price rip up to this level today? I hope not, because my strike's at 69.15. So I don't want it to go gangbusters up today. And again, should it? Should price go that high? It shouldn't. I mean, the nice thing is the VIX is retreating pretty darn hard, right? Like, that's an encouraging sign the VIX is getting smashed today. So, is the market going to rip literally all day? Here's one thing I would look at. If this is going to go up, 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 remember, we can calculate roughly a top. Doesn't guarantee anything. Look at my VIX box right here. All right. But if we get up to this level, one trade I could add for another layer of defense would be, if my strikes are threatened, I would look at doing some type of bear call spread between like 69.05 to up to like 69.20. I would try to do something where I can get the market working its way back down. Okay. I have a feeling that we're not going to test these levels today. It's just going to be a bunch of noise, right? Look at how aggressive this is right out of the gate. We're talking, 19 minutes of trading. We have a spike low, spike high. It'd be nice to see price just chillax, and that's going to be good for our daily profit play. Okay. So, one thing on daily profit play is it is very intense. It is 0 DTE. There's a lot going on in these morning sessions, but you can ask anybody in here that's been with me, that's been following me. We have 508 winners in the last 16 months of trading. We're winning 89% of our trades. We make money. Okay. There is a plan. There's a method. So we learn the core strategy. We can, quickly navigate an option platform and not navigate to our trades, because when I post them, you're in right alongside me. So I think that everyone would agree, like, you're in the right place. Whether you want to trade every day with me, whether you want to trade every week with me, whether you want to trade, earnings catalysts, whether you want to trade some 0 DT butterflies, whether you want to trade some volatility, whether you want to trade, weekly index break evens, whether you want to hedge your account, or whether you want to trade like a portfolio manager. That's the stuff I run. Okay. Dave says filled 10 wide for $1.50, 15 wide at $2. Good. Very good. Is there a way to determine how many times the winning trades are due to insurance trades? No, because honestly, I don't really have the insurance trades or the defense trades. They don't fill very often. You have to remember, like, the whole core strategy is look at the green line. Our whole core strategy is this is the expected move, and we are above it and below it. And so most of the time, that is our win. Prices most of the time will stay inside of this blue range, which allows us to win when we're outside of that. So our defense trades, like yesterday, the reason that defense trade won is because we calculated that our bottom would be around 68.38. We went a little bit lower, and we got filled on defense, and price settled at the expected move. So the defense trade is there just to do what? It's just supposed to help offset some of the risk, you know? So I mean, even if yesterday was okay, we had an $800 winner, it was 825 winner. Let's say that I took a full loss yesterday on daily profit play. If I lost 850 and my insurance or my defense trade paid 825, I'm still down 25 cents for the day. But my question to you is, would you be happy walking away with a minus 25 or minus 850? To me, that's a no-brainer. The fact that it was a day that was basically threatening our call side and put side mainly, but rather than losing a full daily profit play, we lost 25 bucks. I'm freaking stoked. That's a much better result because then you have another win right around the corner. So anytime we see these inefficiency type days, we got to be prepared to trade the next day. So the goal is like we have our standard daily profit play. I like to throw in defense trades just to help. We've had a couple examples. I mean, it was I don't even know what day it was. It was a Friday, like a couple weeks ago, where the market ripped up so aggressively that it acted like the VIX was at 27 when the VIX was at like 17. It was like one of the most non-correlated VIX and S&P days that I've seen in a long time, and it was to the upside, which kind of annoyed me because mathematically it's like we put so much time and energy into calculating out what we do on a daily basis that it's like, what the hell, man? Like, what the fudge? How is this not like more realistic, especially to the upside? Downside I can understand when it's like the VIX is uncontained, but look at the VIX today. 22 and all the way down. So one thing I want to look at today is we've got a spike here on 22. Let me find that exact math. So that's 2208 VIX. Probably like a 1.4, 1.38%. Okay. Let's make a note here. 1.38%. Now we started the day. Is this right? Did we start here on this red candle? So we opened here, slid lower. So that's my open price. All right. So my green level is 1% higher. So VIX box is going to be around the 1.38. If I'm going to sell, this is going to be like another kind of heavy defense position. I probably don't need it, but I'm going to take a stab at this. If we are here and we go up 1.38%, if I get a chance to sell like a 69.15 today, 69.15, 69.20, I am going to take a stab at that trade. Okay, 69.15, 69.20, that's right around my calculated VIX move. Actually, I think it's going to be a little bit higher. I need to go up here. So I start at the opening price and go 1.38. There we go. So the like 20, I'm going to go 25 to 30. Okay, so I'd say 69.25 to 69.30 top with the VIX at 22.08. So we shouldn't see price get there. But if it does, I'm going to defend again. Okay. And to the downside, because we opened lower, we opened right here, push lower. I'm just going to take this level and go open down 1.38. And there's about 67.43. 67.43 bottom. And again, that's a VIX at 22.08. If the VIX goes up above 22.08, the bottom is not safe. Okay. If the VIX goes above 22.08, the bottom is not safe. That's the one thing we always have to be mindful of. To me, it is a lot easier to call the top intraday with the VIX calculation and the expected move. What is price doing right now? Exactly what we need it to do. Right? A lot of volatility right out of the gates. We had a quick swing. This low, this high. Market's already swung 55 points from the actual open. The market's gone up about 33 points. We should be seeing prices come back to center. So my 15 wide is now up $100. My 10 wide is up $60. Already, part of me wants to just take profit. Like, why not? I'm up $150. It's been 25 minutes. I'm just going to take it, run, and I have no risk on the day. Cancel my defense trades. Walk away happy for a quick winner on daily profit play. See what I'm saying? Like, that's not a bad trade. So let me see if I can grab 50 and 100 here and just walk away with 150 bucks. That's just under. So I've got a max profit of 360. So if I grab 180 bucks, like that's 50% of the day. That's, we all know that's good. I'm going to try to set this one up. So $2, try to get out at one. Try to get out at one. And for the $1.60, let me try to get out of here at try $1. Okay, so I'm going to put each one debit at $1. That would give me 160 bucks on the day. So let me update that for Telegram. DPP update. So I'm in the 15 wide and 10 wide. Entry $2 on the 15 wide. Entry $1.60 on the 10 wide. Setting both closing orders at $1 debit. Pending. So if I get filled, that's $1 of profit and 60 cents of profit. I'll make $1.60, and hopefully this trade is done and over with in the next maybe 10, 15, 20 minutes. I think that's a fair take on the day. If I walk away with 160 out of 360, I'm making about 44% return on my credit, which intraday, 0DT, that's pretty good. That's respectable, especially getting a little bit heavier today and more active. These are not trades I want to sit on all day. Okay, but price is doing exactly what we need it to do, which is a lot of volatility, and price is still kind of calming down. VIX is calming down. That's encouraging. Price is calming down. That's encouraging. We'll see if market makers do the job. So now time is on our side. If price is going to just chillax for a little bit in here, we should have enough to get some profit. Okay. Who's with me? Everybody good? So the point is, like, we're taking a stab at it. Hopefully you're getting a quick win. And, right now I've got this one $60. This one's up 95. Like, I'm close to getting profit on both of these. I'm just setting to take profits at $1. You can see my mid price is trading for about $1, trading for $1.05. A little bit more time. It's probably all we need. CLJ, I see that for the defense trades again. They're pending orders. So my call side defense trade is trading for like 8 cents debit. I've got a pending order at $3 credit. You have to put these in pending, good till canceled. You have to tell the broker I want it for a credit. You're not taking the trade at a 10-cent debit. That's a terrible trade. It's a broken wing butterfly, so we want the credit. Okay. All right. That 15 wide I saw just flashed to 92 cents. We got to get close to get filled on these things. Let's see here. Jason says 175 target, 1 exit. Good. Did the 50% target this morning. Just started live trades. Should give more room to capture more profit. And that's okay. Mechanically, Mark, we typically like the 15 to 25. I love the 25, 30% take profits. 15 is like very quick, very mechanical. If you go higher delta, if you're going like 15 delta, 20 delta, 15 to 20% is a great profit target. If you go 10 delta, I like going after like 25, 30% minimum. A lot of times I'm trying to squeak out like 40, 50% return on credit. Yep. All right. So we're getting close to those profit targets there. I've got the 15 wide showing right at the mid price. All right. Just got filled on the 10 wide. 10 wide got filled for $1. So the 10 wide is out. So quick update, DPP update. 10 wide closed at $1 debit. So entry $1.60. Closed $1 debit. Quick 60-cent winner. Now waiting on 15 wide as I say it. Closed out. 15 wide, closed at $1 debit. Nice when a plan comes together, huh? $2 credit, close $1 debit, quick $1 winner. So plus 160 on the day. Happy to be in and out quickly. Nice win. Canceling defense trades. Go enjoy your Tuesday. That's it. Like now we don't have to sit here and spend all day like, oh, I wonder. Don't just chillax, right? So daily profit play style, happy with the winner. Closed out. And now I'm going to cancel those defense trades. Call side, cancel, put side, cancel. Now the market can do whatever it wants. My day is done. Okay. So again, this is just a really good lesson to take away from this is what daily profit play is all about every single day. Okay. Was the market a little nuts? Yep. But what did it do? It shot lower, shot higher, came right back to where it opened. That type of volatility right in the morning is still easy because all things have to do is see the VIX settle down a little bit. VIX was up to 22, got smashed down to 20, and price is where? Right in the middle. You know, I mean, should I have held out for more profit? Maybe. Would it surprise me if the market's inside of the blue range today? Not at all, right? But considering I've got what $840 risk on one trade and $1,200 risk on another trade, if price flirts with my tops or bottoms, I'm taking on $2,000 risk, which is fine. If I'm dead wrong, I accept that risk, right? That's like 2% of my account. That's a little high though. So when I can see that a day like this where volatility, was plentiful, but yet prices came right back to recenter in, 30 minutes of trading, that was enough to grab a pretty quick win. We grabbed 44% of the credit. We're talking mechanically going after like 20%, 20 to 25% mechanically. But remember, why did I go for a bigger profit target? Because we started with low deltas, right? This is like a 10 delta. Down here, this is like a 10 delta. I mean, the one trade was like a 6 delta. So, I mean, on paper, I'm going with like a 90% chance of profit, 94% chance of profit on these trades. So I don't mind riding these out a little bit, but that's a quick win, right? To me, that's a quick win. I'm going to take it. I'm happy. That way we don't have to, we don't have to worry about the rest of the day. So I want to keep, I want to keep the green lines here because this will, again, kind of prove our methodology, which is most of the time, despite high volatility, despite low volatility, you measure out what the market makers expect for the day, and they typically keep it there. So to me, I'm pretty confident that the market's going to give us a move like staying inside this blue level today. I think that's pretty straightforward. Cool. All right, pretty good win. So anyway, now we can start spending some time on newsbreakers. We start talking about other stuff. Let's see what happens. All right, I'll move this out of the way. I'm going to get some. I want to look at some news flows for earnings. So after close, AMC, Kava, Axon, Zeta. I'll look at some of these, see if we have some flows. Let me see what else I have running. See one other trade here. So I want to see. I like that 6750 zone. Hang on. 6930. So 180. All right. I was just looking at another trade setup. I'm just going to chill. I'm happy. I'm happy for the day. I think this is a good win. Okay. Good time to ask questions. Yep. We got a whole crowd that's also able to answer them. So is everybody in and out with me? So quick update here. I mean, it's been a minute since we've had a trade, open close in 30 minutes and get what we want out of the trade. That's a really good return. Now, part of that is because of this big vol crush, volatility up to 22, then right back down to 20. That certainly helped. Price action getting right back to center. That certainly helped. And now we just stay out of the way. Day is done. Butterflies, no. I said cancel the defense trades. Okay, canceling defense trades going Jury Tuesday. Like for daily profit play, no need to force another trade. If you wanted to put on the daily, if you want to keep the butterfly trade in, that's fine. I would just look at like a butterfly. I don't know, maybe up here. Like if price were to get up into this high. So look at the VIX box for a second. So if we have a top around 69.25 or a bottom around 67.43, look, just for fun, I don't mind putting in a defense trade that if it fills, we have a high probability of profit. I can pin this thing, right? And maybe grab some extra bucks out of it. So 25 by 30, that's roughly the top. So here's what I'll do. Let me drag this over here. So 69, 25, and 30. This is going to be a fresh trade, 69, 25, and 30. So if I went 20 by 30 by 45, that should be the top. So I'm risking, if I put in $1 here, I'm risking $4 to make one, but I have $1,000 profit trap. My break-even price, by the way, is going to be 69.41. That's way, way higher. That somehow got canceled. Whatever, dude. 69.20 by 30 by 45. Put this in for a credit. There you go. $1 credit. Good till canceled. Boom. It's not trading for $1 credit. It's trading for 11 cents debit. So this is a pending good till canceled. Okay. On the downside, I would go down here. We've got roughly our bottom around the kind of 45 handle. So I will go 60. It's 67, by the way. So I'm going to go 67, 45 by 35 by 20 for a broken wing. Also for $1 credit. And that's risking 4 to make one with $1,000 profit trap. Okay, so I'll update this, and you can all have this. If you want these trades, like you can have these, anybody can have these, right? So these are bonus, top, and bottom trades pending for the day. So 224 expiration. And I'll throw these in. So I'm putting this in my broker platform. These probably won't fill, to be honest, because the market's most likely not going to test our top or bottom. But if it does test the top, here's the trade. I'm going buy 69.20, sell 69.30, and buy 69.45. Looking for $1 credit. Pending good till canceled. It will automatically remove the trade once. If it doesn't get filled today, the broker removes it at the end of the day. 224 expiration on the put side. I'm doing the buy 67.45, 67.35, and buy 67.20. That's for $1 credit. Pending good till canceled. So I'll let those just sit for the day. What price has to do is make its way up into this high, and we can get filled. Now, there's no risk on this trade. As long as price respects the range, there's no risk on this trade. My break-even price is 6, 9, let's see here, 20, 30. So that gives me a break-even of 41. That's my break-even price. If this gets filled, I have a break-even of 69.41, which is even higher than my VIX box. That's really, really difficult to get to. So I think that trade is very safe. On the put side, break-even would be 67.24. 67.24 is my break-even, which again, outside of my VIX box. So the probability is getting filled, I would say, is probably less than 5%. But if it does get filled, the probability of this thing getting filled and bouncing or getting filled and rejecting, I'm all for that trade too. So that I don't mind keeping it in the broker platform good till canceled. I'm risking 4 to make one, but I have a $1,000 profit trap opportunity, and that's my break-even price. I'm risking 4 to make one with a $1,000 profit trap with a break-even of 67.24. Okay. So something unusual would have to happen for these two. Number one, like get filled at this point, and number two, threaten our position at the end of the day. More than likely, what's going to happen is it won't fill. It won't fill. We're just going to walk away with our 2 winners today on daily profit play. Okay. All right, Gloria. Keep an eye on it for sure. Good stuff. And for everyone that's talking about, pattern day trading, remember, by probably the end of this quarter, we should have pattern day trading go away. The CBOE, what is it? CBOE, SEC, they should be stamping that approval where no more pattern day trading for anybody. So it's on margin accounts right now that are under 25K, but if that goes away, that's a big win for the retail crowd. Yep. Good stuff. All right. Any questions for today? Any questions on daily profit play? So I've got some pending orders still, way up here at the top, way up here at the bottom, or way down here at the bottom. More than likely, price is just going to calm down. This is just a big VIX mess today. But this is perfect for us for a quick win on daily profit play. Okay. Let's go. Try something here. That's a 150. Hang on a second. Let me do some math. 67, 69.50. It's 250. Okay. I was just looking at a kind of a creative iron condor, and it's a horrible trade. So never mind. All right, I think I'm good for the day. That's good. We'll keep those broken wings in. It doesn't cost us anything to put them in pending. They're pending credit orders, so it doesn't cost us anything to take them. We don't have to, try to pin something today. We're not getting lucky. It's like price has to do something pretty extreme to the highs and the lows. I will say this: another trade that could be very cost effective. Again, paying attention on the day would be this. If we come up to test this level, one thing I might look at is we talked about this a little bit last week. Let's just take an easy price like 6,800. Okay. Let's say that price is trading up to 69.20 today. Okay. If I don't think it can stay at 69.20, this is one trade that I'd like to do is I would sell the 6,800 call and I would buy the 69.20 call. Okay. How many points wide is that trade? So I sell one here, I buy one here. How many points wide is that trade? Do some math for me. I know the answer. Tell me. Let's get some engagement. 120 wide. 120 wide. So if I put in a trade for $115 credit, that's a risk of $5 to make $115. Now, the probability of making $150 is low, but if this is the top for the day and the market sells off by 10, 15, 20 points, I'm risking $5. Let's say the market settles back in below this blue line, which is 68.90. Okay, that trade just turned into what? If your break even would be 69.15, we settle at 68.90. That is 25 wide, right? You just made $2,500 on a trade that cost you $500. Like those are some pretty fun trades when you're pretty confident we've got a top or a bottom on the day. Does that happen every day? Of course not. But this is the type of bonus stuff that if you pay attention to the markets on a daily basis, having a top or a bottom, again, you're taking a calculated risk. So if I did this trade for a 115 credit, or even better, like a 117 credit, I'm risking $300 to make up to $117. And all we need is, as long as price is, let's say I get filled for 117, my break even price is 69.17. So price settles at 6,900. I'm up $1,700 to risk $300 at the end of the day. I love trades like that. I love those trades. Do they always work? No, but knowing that all it takes is one nice winner, it washes away. If I made $1,500 risking $300, I mean, I can wash away 3, 4, 5 positions. The goal is obviously not to wash away your gains, but if we take losses, like, we want to make sure we're getting ourselves in a position for higher reward than risk in a trade like that. Does it work 80 wide? I mean, it's the same thing. If you did 80 wide, I mean, what difference does it make? If you did 80 wide, you take the trade for $75, you're still risking 5 to make 80, or I guess 5 to make 75. If you do it at $77 credit, you're risking 3 to make 77. Right? So the width it's really just about, like, can you get the fill close enough to keep the risk nice and tight and then have the downside pay us? So, for example, if the market did this today and it just kept going up, 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 I probably would take a trade like that, risking like $500 and see if the market settles back down. Because if it does, that pays a lot of money. Right? Please type out that trade. Well, yeah, so the trade's only going to matter if we're up here towards like 20, I'd say between like 20 and 25. So if we're like 20 to 25, 69, 20 to 25 on the upside, then I'll give you the trade. So here's one. If we did, I mean, 6,800 is just a big round number. So if I did a sell 6,800 call, buy 69, let's just go 69.30, right? So we have 130 wide. If I could do that trade for 125 credit, right? So I have $5 risk for a 125 reward. My break-even price would be 6,925. So anything lower is profit. Type in a wire yes, so that makes sense. So if I sell the 6,800 call, buy the 69.30, that's 130 wide, I get filled for 125. I need price to stay below 69.25. So if it stays below 69.25, every point is $100. So if we were to hit this level, get filled, and it closes back down here at 6,900, you're up $2,500. If it closes down here inside the blue line at 68.90, you're up $3,500. All risking $500. So not a bad trade. Is it a guarantee? No, of course not. I'm calling the top. It's not a guarantee, but it's still a heck of a good trade. Okay. So that is something I will watch. So let me set a chart alarm. Let me set a chart alarm here at about 17 to 20. I'll set a chart alarm at 20. I'm going to be kind of interested in this. If I can keep my break even, again, we have a butterfly trade up here, so I'm not like super pressed to take this trade, but this trade offers way more reward the risk than just the butterfly trade. So I'm going to set an alert at 6,920, and that would be up just above these highs, right? That would be maybe getting up to the VIX box high, which is around 27. So, I mean, I'm interested. I'm interested in maybe looking at the market, falling back down by the end of the day if that's the case. Okay. Otherwise, price is just going to kind of hang out here for the day, and that's it. We're under this blue line. We're above this blue line. It is a day that the expected move is greater than the actual move. Why is this the magic formula in trading daily profit play? Because this is how we get paid. Expected move is in blue, and we're trading in green. And if the expected move is greater than the actual, that means that price stays within the expected move, and we get paid in full if we're trading at the green levels, which is slightly higher and slightly lower than the expected move, right? And most of the time, what you'll discover is that prices stay inside the expected move a lot. This is what we trade. This is what we test. This is why we win 90% of our trades. Okay. There will be days, and I always disclaimer this, like there will be days, and they're occasional, maybe 5 or 10% of the time, that the actual is greater than the expected. That can happen. We saw this happen during Liberation Day, both like to the downside and upside. We saw this happen during Jackson Hole. We saw this happen in NVIDIA on the 20th of November. We saw it happen October 10th. We saw it happen. What was that? What was that Friday freaking comeback trade where the market was up like 1.6% for the day? I mean, I calculated like a 1.25, 1.3% move. We got blown out to the top side. Actual was way above the expected. Now, to be fair, I did take a loss that day. We came right back, and I traded pretty aggressively the next couple of days and got it all back within 2 days. You know, and I'm not trying to revenge trade necessarily, but I'm like, yep, it's just inefficiency tends to realign the market into like, okay, market makers cannot afford to allow, they can't afford to be inefficient. They can basically, in zero DT trading, they can afford to let it be inefficient like one day because there's too much risk. There's too much risk to be wrong. So what they do is they can roll a zero DTE to the next day, and what they typically do is they will bloat the expected, right? They will bloat the expected, and that expected will be typically way greater than the actual. And so if this happens once, you'll probably have like 3 to 5 days that are right back in line with what we need. So this is why I try to teach grit and persistence in this strategy, because one outlier type day is going to come back and give us multiple winning opportunities, right? So you've got to be prepared to trade, right? And that's why we have defense trades. That's why we manage risk. That's why we know, exactly what we're doing from a risk reward standpoint, because these trades work. They work. David, they filled. Yeah, one of them filled. The 50-cent trade filled yesterday. Yes. Okay. Yep. So I had a couple that said that. So Larry said his didn't fill. David, you said yours didn't fill. Just let it marinate. We've got plenty of pending orders. Let it sit. Let it chill for 50 cents. It's probably going to be fine. The 3-2 put 690, 689 for 50 cents if filled. Clinton, that's so. I mean, what's the strategy on engineering options? I don't really want to micromanage the trade. If we get filled for 50 cents, I'm trying to let it close where price is going to be greater than 690. As long as price is greater than 690, that's a full winner. What size accounts need to continually trade the strategy? So today's trade, for example, if you just take the 10 wide trade, so the 10 wide trade that I did today, I got filled for $1. Let's just say $1.50 on average. So I needed $850 today to take that trade. I need $850. I just walked away with, I grabbed 60 cents today. So, if we take a trade like this, sometimes I'm willing to hold this thing to make $1 profit. So plus $1, or even, let it go like to $1.25. Sometimes I'll hold it all day. I'll make $1.50. But $8.50, that's all the buying power you need to take the trade. And then you can manage profit whenever you want. If you want to take that, make $50, $75, $100, $125, great. You want to hold it all day, you can make $1.50. But buying power typically is going to be under $1,000 to routinely take these trades. So I have a lot of traders that do this strategy like full time, and this is like their bread and butter. I have traders that use like a 10K account, and this is all they do is they grind this thing 5 days a week. Some traders do it where they have, $10,000 account with this broker and $10,000 account with this broker. That way there's no pattern day trading. But remember, like I said, in about a month or so, month and a half, pattern day trading should be gone. By the time we get to April, we should have no more pattern day trading for margin accounts. Yep. Roar says 10 wide got filled, $1.70 out at $1. Good, made $70. Awesome. Sharita made $65. Good. So Buff, that answer your question. So for like under $1,000, you can get into these trades, and you can do less. You can risk less. We can take this trade where you can go $1 credit $1 credit on a 5 wide, and you're risking $4. Okay. And a lot of times we take this trade is I'll let this $1 trade down to, 20 cents, down to 15 cents, down to 10 cents, or let it close all the way to give me the full dollar at the end of the day. So that's the setup, right? And I've done the math here. Let me see if I can find the old notepad from our last masterclass. I'll show you. Daily profit play here. Yeah. So I just said this, like, if I use the math, like our average winner, if our average winner is 90, so we're just assuming, okay, we're assuming that we're doing like a $1 credit and a $4 max risk, right? So I'm assuming that right here. So if our average winner is $90, which means we basically take the trade at $1, put a debit in at 10 cents, average winner is going to be $90. Your average winner is $90. Your average loser, and this is with our track record. So at 89%, are we making money? Right? We have over 500 winners in the service. So we've got traders that are up, $25,000. I got traders that are up 6 figures on the strategy. But it's just math. So if my average winner is 75, I'm up $17,000. 17.5. If my average winner is $50, I'm still up $5,000. And that's only taking $50, right? That's taking $50 out of this trade, still risking $400. I didn't defend this, right? I didn't defend this. So what I posed is if we play defense and we trim our average loser, instead of taking a full loss of $400, if we trim it to $200, guess what? You're increasing all this bottom line. Your average loser would be smaller by playing defense. Your average winner is still the same. This is a strategy that we plan on winning. The key to me is managing risk, which is why I put in the defense trade. So in essence, it's hard to lose money with the persistence of this strategy. Okay. One thing you have to get over is, yes, the losses on average are bigger than your average winner. But the probability of profit at 89, 90% is why we do so well in this strategy, because it is what the market makers cannot afford to get wrong. They can't afford to get this wrong. Okay. So if they get it wrong by a day, and what's crazy is, and correct me if I'm wrong, we got 200 people in the room today. We had 300 people earlier. Everyone took their money and left. But the what is crazy is a day. So I will go back in time and show you, like, okay, so yesterday, even though it was a down day, it was exactly at our expected move. I'd categorize that as an efficient day. This was efficient. This was efficient. This was efficient. Okay. What I'm telling you is there's no excuses in trading, but we can have the market kind of build in a baked in like outlier, which is, if we're wrong, the market essentially did something out of the ordinary. Does that make sense? This is why managing risk is so important, because don't try to overtrade if the market's doing something crazy. Like November 20th, the market did a 3 standard deviation move. That is huge. You know how many times the market does that? 1% of the time. That's how rare it is, but it does happen. October 10th was a 3 standard deviation move. 1% of the time it does that. So these occasional outliers will happen, and we might take losses. But if we can manage a loss or play some defense, maybe mitigate some of that risk, we will survive, and we will trade 10, 15, 20 days in a row where we have winners. So one of my big followers, Larry, brought this up. I mean, there was a stretch. 3 days out of 8 were inefficient. But to be fair, you go back and get a sample size of 50 days of trading. Those same 3 days were the only inefficient days in 50 days of trading. So yes, it felt like, oh my gosh, 3 times in 8 days, that's really crazy. But you go back and you see that in 50 days, it was the same 3 outlier days. Does that make sense? So if we had 47 winners out of 50 trades, we're still making a lot of money, right? Our win rate's 94% by just planning on market efficiency. So there will be the occasional outlier type day. Okay. It happens. We talk about it. I never have fun having an outlier type day. My goal is to try to defend myself. My goal is to try to mitigate some of the risk, and I typically do that pretty well. We're also planning, like, look at an outlier day. It's like we're rarely surprised by the market going too high or too low. That's why I had this indicator right here where that's my kind of calculated high. That's my calculated low. So we're not really surprised that often. Okay. The inefficiency is if price is above this blue line, if it's greater than this blue line, it's inefficient based on what the market makers set for the day. If it's below this blue line, it's inefficient. Now, notice that we still give ourselves an opportunity to make money at the green line, And if we're all the way up to this yellow box high or this yellow box low, that's a very extreme move. But we also calculate that with our VIX. So I go back and say, like, we have like a plan A, we have a plan B, and we even have a plan C to try to help offset some of the risk so we can just keep taking good trades. Cool. All right. Mike's popping in. What's up, Mike? How are you, man?
Hey, Chris. How's it going? Can you hear me okay?
Hear you great. The voice is
Awesome.
sounding good, by the way.
Hey, there we go. Yeah, just getting over a little cold. So got that deep voice for you.
Very nice. Very nice. All right. Well, thanks for coming in the room and joining us today. Honestly, we had a fantastic daily profit play. It was very quick. We were in and out within about 30 minutes today, which used to be the old strategy, which is we're in and out quickly. But we had low deltas today. The market was pretty volatile. We had a pretty nice VIX crush. So the day is
Very
done.
nice.
We pulled out a nice $160 today, which I'm super
Awesome.
happy with. And I'll
That's
get the
great.
update in the tracker and stuff. But another win. And for everyone that's hanging out watching today, it's funny. We probably lost half the room today because everyone took their money and ran in the first 30 minutes. Usually we keep a pretty good crowd here until about 11 o'clock. So um, everyone.
No
So
worries.
I saw like Bruce was asking, how many of you are in today's session that want to learn more about daily profit play? Like I said, it's a pretty intense session. I get it. I know it. We do it every single day, but I can promise you that I've taken traders that could barely turn on the broker platform, turn on a computer, let alone a broker platform, now navigating their option chain, trading daily profit play like freaking pros, and they do this thing full time. I know my ability to teach. I have tons of patience to teach. I get it that learning, there's a curve to trading options, and my goal is to make it as quick as possible. There's no reason for us not to think about the option market, think about trading the markets in probabilities. That's all this is. If the market can stay inside of this range, that's market efficiency. Okay. This is how, if you believe in like market efficiency theory, which is like 90% of the market, we're going to win. And you can read one of my favorite books is The Unlucky Investor's Guide to Trading Options. It's the Julia Spina from Tasty Trade. If you read that book, you're just going to see a bunch of math, but it works, right? You look at, I can test this thing from 2022 with zero DTE. It wins anywhere between about 90 to 94% of the time. Okay. There is risk. I told you that, but our goal is to be understanding the reward of risk. And this is the magic. If the expected move is greater than the actual, we make money every single day. On the occasion, and it's rare, but like let's say 10% of the time or less, the actual is bigger. We're fine. We still have a plan B. We still have a plan C. We still play defense. We're going to try. We're going to try to never lose. But in the occasion that we do, it's an outlier type day. Okay, fine. But we come right back. We come right back and we just trade this over and over and over. Market makers cannot afford to let this get out of whack. They must for liquidity's sake and for their books. They must do this. This is how they make money. And this used to be something that was like every week or every month and every quarter. Now it's every single day, which gives us opportunities to trade literally, 200 plus times a year. So it's a lot of fun. And Mike's going to talk more about it. Mike, do you need me for anything? I'll hang out and answer some questions for you at the end.
Yeah, that'd be great. Yeah, if you want to stick around, I'll probably jump back on the phone lines.
Okay.
But yeah, I can definitely dive in. I'll share my screen here.
Yep. I'll give it to
Uh,
you. Go ahead.
okay, perfect. Um, all right. So yeah, so I appreciate everybody here. If everyone can see my screen, Chris, you can see it.
Yep. You're good.
All right, awesome. So I'm here to talk about the best way to day trade in 2026. So basically, I wanted to first start off with a friendly reminder. So we develop tools and strategies to the best of our abilities, but no one can guarantee the future. There's always a risk of loss when trading. Past performance is not indicative of future results. So these stated results are from live published alerts between August 26, 2024 and February 23, 2026. So the win rate has been 89% on the options with an average return of 14% over a 1 day full time. So just like Chris was just saying, in trading, there are losing trades. No system or strategy prints out winning trades 100% of the time. So the purpose of Chris's work here is to help give folks an edge in the markets. So please don't trade with any money that you can't afford to lose. And like Chris just introduced me, my name's Mike Harding. If you're just joining in, I'm part of the membership success team. So my role here is to answer any client calls that come in and make sure that you feel totally comfortable with the trading strategies that you're calling in on. I'm here to answer any questions that you have and help you gain access to those services. And I'm super excited to walk you through our number one day trading strategy of 2026. So it's a strategy that 1,032 different traders have been using to target daily income from the stock market. So in fact, over the last 18 months, it's helped us win more than 500 day trades with an accuracy of 89%. On average, that's about one winning per day. And here's the cool part. This type of strategy is not connected to any sort of market pattern. So it doesn't require us to flip through like dozens of different charts. It doesn't demand any technical know-how. In fact, all we have to do is activate our trade at 9:35 a.m., let the market tick a few points in either direction, and as long as nothing crazy happens, we should see at least $100 hit our account within the first 90 minutes of the day. Now, I understand. Sounds a little crazy, right? Maybe even too simplistic to actually work. But look at our trade from Thursday, August 14th. Anyone using this unique trade could have set the position at 9:35 a.m., spent the next 90 minutes, let's say, at the gym, and came back to see an extra $162 sitting in their account. Or how about the next day, Friday, August 15th? Anyone following along could have popped their trade in at 9:35, maybe hit the trails for a quick ride, and came back to 90 minutes later here to see an extra $112 automatically sitting in their account. How about Monday, August 18th? Once again, anyone leveraging this unique trade could have set up the position at 9:35 a.m., met some friends for a hike, and came back to an extra $250 just over an hour later. Now, that's a total of $512 over the course of 3 trading days. Now, keep in mind, these trades did not come from a backtest. They were not pulled from a study. I mean, these were real trades Chris found and shared with his students. So, in fact, over the last 18 months, he's posted more than 500 of these daily payouts. Like on July 7th, I mean, we could have popped in our trade around 9:35, spent the morning on the range, and came back 90 minutes later to an extra $149 in our account. Or what about the 21st? We'd set up the trade at 9:35, do whatever we wanted to do, maybe a little golf here, and came back just 90 minutes later to an automatic $298 in trading profits. Now, we didn't have to time our entry. We didn't even have to time our exit. And we even didn't have to close the trade manually. So our returns would have been deposited into our account automatically. Now, I'll admit, something like this should not be possible, but it's all thanks to a unique anomaly hidden inside the options market. And it's allowed anyone to target $100 or more each day. Now, let me assure you, this is not some silly gimmick. This anomaly has been studied by Columbia Law, the University of Syracuse, and even the Federal Reserve. Yet, most folks just don't know how to leverage it. But today, that all changes. You see, in today's session, I'm going to share the secret behind each one of these daily trades. But not just that. I'm actually going to go ahead and show you how to join Chris tomorrow morning for a brand new trade opportunity. So if all goes to plan, we should see at least $100 hit our account within the first 90 minutes of the day. So, if that sounds exciting to you, I'd like to welcome you to the Daily Profit Play. Now, if this is your first live event with us, again, my name is Mike Harding. So during my time here, I've seen dozens of highly profitable strategies produced by some very talented traders. However, when it comes to targeting daily income, none of them quite compare to this daily profit play. For starters, it has an 89% accuracy across hundreds, hundreds of live issued trades. But more importantly, it has all the attributes of a strategy that I'd trade myself. Insane accuracy rate, limited risk, short hold times, quick execution, affordable options. And most importantly, the chance to target an extra $100 or more each and every day. Now, the man behind these daily profit plays is Chris Pulver here. He's arguably one of the most innovative option traders on the planet. So at his former hedge fund, he managed a multi-million-dollar book on behalf of private clients. And even today, he actively trades more than $5.2 million on behalf of friends and family. He's traded through the dot-com bubble, the housing bubble, the great financial crisis, Brexit, the 2020 pandemic, and every major market event over the last 25 years. And get this, he's even a certified golf instructor for the PGA. But since joining our team, he's quickly become one of the most sought after traders in our company's history. Like I said, he's shown our traders over 500 unique winners with an accuracy greater than 89%. So you see, unlike most trading strategies, the daily profit play is not dependent on market direction. So the market can tick higher, it can tick lower, it can even stay dead flat. Yet each scenario offers the chance to collect $100 or more within the first 90 minutes of the day. And that's why I'm here today. So I'm going to hand you the complete profit play strategy and show you how to implement it tomorrow morning. All you need is a regular brokerage account and a few minutes to set up the trade. Now, before we get too far along, I want to be clear with everyone. Today, you're going to see a lot of winning trades, but that does not mean losses won't happen. If the market does something very out of the ordinary, it is possible to lose. So if you decide to trade with Chris tomorrow morning, do not over leverage yourself. You see, finding success in the stock market is not about closing one big trade every once in a while. It's about doing one thing consistently and watching results compound. And that's what the daily profit play aims to do. So it's a basic trade anyone can implement any day of the week. So it does not matter if we're in a bull market or a bear market or even a recession. So all we have to do is set the position at 9:35 a.m. Let the market tick a few points in either direction. And as long as nothing extreme happens, we should see $100 or more hit our account within the next 90 minutes. So it's been proven to work in the best of times, but more importantly, during the worst of times. And that's not an exaggeration. So let's go to an example here. Let's jump back to March. So if you don't remember, that was the worst stretch of trading since the pandemic. So over the course of 33 days, the market lost $11 trillion. Now, this was one of the most aggressive downturns in the history of the stock market. So according to Fidelity, the average 401k lost $127,000. And if you were trading options, good luck to you. $1,000 into almost any long call option would have expired worthless. However, $1,000 into the daily profit play would have posted a very different outcome. So, in fact, throughout the month of March, Chris posted 42 winners and just 4 losses here. That was a 91% win rate during the worst month of the year. Now, for the sake of time, I won't take you through all 40 plus trades, but some of his best include a $333 return on March 3rd, $290 return on March 4th, $183 return on March 5th, a 101 return on March 6th, $136 return on the 11th, 149 on the 14th, $162 on the 17th, $273 on the 18th, $160